So now one other thing we need to talk about is the objectives of the tax law. Uh, the taxes do more than just raise money for our country. Uh, and if you've seen our national debt, if you've heard of anybody talking about our national debt, you know, we're doing a really bad job at raising money for our country. Well, we're raising a lot of money, but we spend a lot more money. So that's our problem. Uh, you know, this was a slide I made last year. The debt was $22 trillion, or 68,000 per every man, woman, and child in the United States. And they have this great website. I love this website. If you go to this website, US Debt Clock, this shows you a live look at what our debt is. So right now we're looking at $26 trillion, and that is $80,000 per citizen. So, you know, one thing to think about is if everybody called our debt, we had to come up with $26 trillion right now. You know, the government would go to every person, every man, woman, and child and say, hey, I need $81,000 from you. Well, most of us, like myself, I'd be like, I don't have $81,000 to give you for myself and for my wife and for my children. And so you'd be stuck with having to sell everything to pay your share of the national debt. Luckily, that's not going to happen, but this is something you ought to be aware of. The national debt is just going crazy. But the bottom line is we spend way, way more than we take in. You can see every year we have to pay nearly $4 trillion in interest. So the US taxes are there to do a lot more than just raise money for our government. As you saw, we're doing a poor job of that. But there's other things that we do with our tax laws. You know, the first one we were talking about was economic, to raise money. But there's another kind of segment to that, and that's to make people do certain things, specifically businesses do certain things. And then there's social purposes to get citizens to do certain things. So let's look at those. The two purposes of tax law: economic, raise money to run the country. We kind of saw we're kind of doing a poor job of that, but that's one of the reasons to do it. The next one is to get businesses to do certain things, and we'll look at that here. Spend money to buy equipment. So we have this section 179 that allows us to write off equipment in the year we purchase it. If you remember from your principles of accounting class, you normally have to depreciate equipment over the life of the equipment. So a lot of equipment is 5 to 7 year property. So if you buy a $7,000 piece of equipment and it's 7-year property, assuming straight line depreciation, you would write off roughly $1,000 every year for 7 years. But by using section 179, that allows you to write off that full $7,000 in the year you buy it. And so Congress modifies this section 179 to encourage businesses to spend more money buying more machinery and equipment, which, you know, promotes the general health of the economy, because now we have more orders coming in for machinery and equipment. So the factories and whatnot have to hire more people, buy more materials, more supplies, more payroll, and it just promotes the overall health. We also have this special depreciation allowance, which is even better than section 179. And we'll get into some of these things later, but it basically does the same thing. It allows you to write off larger portions of your furniture and equipment than you could. You can get some tax credits by hiring certain employees like veterans, disabled people, Native Americans, et cetera. We have all types of tax credits that the government might help pay for your payroll taxes if you hire certain people. So these are economic incentives that Congress allows businesses to do. And then you can also get businesses to do certain items that you would think would be good for you. The big one is research and development. Think of all the research and development going on right now for the coronavirus. Everybody is working to try and find a cure for that. And there are going to be some huge tax credits given to all these companies that are actually researching a cure or vaccine for the coronavirus. And then renewable energy. You know, we've all heard about the oil crisis and whatnot. And so renewable energy is another one that you can get some huge tax credits on to put renewable energy in. Even for your own personal residence, you can get right now, it's a 30% tax credit on any like solar panels you would put on your house. So if you go out and install a $100,000 system on your house, you could qualify for about a $30,000 tax credit on your individual tax return. And businesses get the same thing. And it doesn't just have to be solar panels. There's other things that you can use that for. So there's some social items that we encourage our citizens to do by manipulating the tax laws. I mean, we're really just, when it comes to the tax laws, we're just puppets of the government here. We do whatever they want us to do to give us the most money. So some of the tax credits you can get are for adoption. There's a huge tax credit. It's like $14,000 that you get for adoption expenses. And you can get even more tax credit if you adopt a child with special needs. You don't even have to spend all the money to get a full tax credit. Like the regular adoption, you can get a credit up to $14,000 for your actual expenses. So if you only spent $9,000, you would only get a $9,000 tax credit. But if you adopt a child with special needs and you only spent $9,000, you would still qualify for a $14,000 tax credit. So again, not only were we trying to get you to do certain things like adoption, we get you to adopt certain people. Educational credits, big benefit to having a smarter populace. So we give tax credits out there. There are 3 tax credits out there right now that give you some significant savings for going to college. Now, if you're fresh out of high school, you're probably not seeing these tax credits because your mom and dad are probably claiming the tax credits, because they generally go with whoever's claiming you on their tax return. So the biggest one we have is the American Opportunity Credit. You can get up to $2,500 of a tax credit, and we'll get into the differences between tax deduction and tax credit later on, but just know a tax credit is much, much better than a tax deduction. So the American Opportunity Credit is a $2,500 tax credit. And then you have the Lifetime Learning Credit, which will help pay for, education beyond your bachelor's degree. And then there's a few others that allow you to deduct some other items for college purposes. Dependent care credit. If you're married or if you're single, either way, and you're caring for a child, you can get some credit for your daycare expenses that allow you to go to work. Now, if you're married, you do have to, both you and your spouse both have to be employed to qualify for the credit. So you can get up to 20% of your daycare covered. And I shouldn't say up to, you can get more than that depending on your income level, but for most people, it's about 20% of your daycare credit, up to $600 per child. You can get a tax credit. And then charitable contributions. The more people that are taken care of by various charities, the less that they rely on the federal government. So if we can allow charitable contributions for a food bank, let's say, people will probably go to the food bank to get their food, and then maybe the federal government wouldn't have to rely so much on food stamps or things of that nature to help. It helps reduce the cost of the federal government, and so they give you a tax deduction for your charitable contributions. And then we used to have a first-time homebuyer credit. We don't have it anymore, but there for a while, when the housing market crashed in 2008, they were giving away some significant tax credits to get people to buy a home for a first-time homebuyer credit. But now they modify the laws. You think a first-time homebuyer credit would mean somebody who's never owned a home before, but they defined a first-time homebuyer as somebody who hasn't owned a home in the last 2 years. So a lot of people were buying that. I believe it was a $7,500 tax credit to buy a home.